Your friend just bought some Bitcoin and won't shut up about it. Your coworker says he's mining it in his garage. Your neighbor thinks crypto is going to replace the dollar. Meanwhile, you're sitting there wondering what the hell everyone is talking about and whether you're missing out on something huge or watching people lose their minds over digital monopoly money. Here's the thing, cryptocurrency is either the future of money or the biggest bubble in human history. Today I'm going to explain what crypto actually is, how it works, why people are obsessed with it, and most importantly, the problems it's supposed to solve and the new problems it creates. By the end of this, you'll understand enough to make your own decisions about whether this is genius or madness. Hey, I'm Brandon, and welcome back to My Money Mint, the channel where I break down everything about money, investing, and building wealth. All right, let's get into it. Before we dive into cryptocurrency, we need to talk about what money actually is because most people have never really thought about it. Money seems like this concrete thing, but it's actually one of the weirdest concepts humans have ever invented. Think about a $20 bill. It's just paper with some pictures and numbers on it. The paper itself is worth maybe a penny. So why can you trade it for $20 worth of stuff? Because everyone agrees to pretend it's worth $20. That's it. Money is basically a collective hallucination that we all participate in because it makes life easier. Before money, if you wanted something, you had to trade something else for it directly. You had chickens, I had corn, we'd swap. But what if you wanted my corn and I didn't want your chickens? What if I wanted shoes but the shoemaker wanted fish and you only had chickens? It gets complicated fast. Money solved this problem by creating something that everyone would accept in exchange for goods and services. At first, people used things like gold and silver because they were rare, durable, and hard to fake. Eventually, governments started issuing paper money backed by gold. Then in 1971, we said, forget the gold, this paper is valuable because the government says it is. And that's where we've been ever since. Our entire monetary system is based on trust in governments and banks. When you put money in your bank account, you're trusting that the bank will give it back when you want it. When you accept a paycheck, you're trusting that the dollars will still be worth something when you spend them. Most of the time, this system works great. But sometimes it doesn't. Sometimes central banks print too much money and cause inflation. Sometimes banks make bad decisions and collapse. Sometimes people lose faith in a currency and it becomes worthless. This is where cryptocurrency comes in. Bitcoin was created in 2008 by someone called Satoshi Nakamoto. Nobody knows who this person actually is. They could be one person, a group of people, or even dead by now. They published a paper describing Bitcoin, released the software, and then disappeared from the internet forever. But the timing wasn't random. 2008 was when the global financial system nearly collapsed. Banks were failing, governments were printing trillions of dollars to bail them out, and people were losing their homes and life savings. Trust in the traditional financial system was at an all-time low. Satoshi's idea was simple but radical. What if we could create money that didn't require trust in any government or bank? What if we could create a system where you could send money directly to someone else without going through any intermediaries? What if we could create money that no one could print more of whenever they felt like it? The solution was something called blockchain technology. Imagine a notebook that records every transaction ever made. Every time someone sends money to someone else, it gets written in the notebook. But here's the catch. Instead of one person keeping the notebook, thousands of people around the world each have an identical copy. When someone wants to make a transaction, they announce it to the network. All the notebook keepers check their records to make sure the person actually has the money they're trying to send. If everything checks out, they all write down the transaction in their notebooks at the same time. Now, what if someone tries to cheat? What if they try to spend the same money twice? Well, most of the notebook keepers would reject the fraudulent transaction because it doesn't match their records. The majority rules, and the cheater gets ignored. This is revolutionary because it means you don't need a bank or government to verify transactions. The network verifies itself. There's no central authority that can be corrupted, hacked, or shut down. It's like having a bank that's run by thousands of volunteers who don't trust each other but somehow manage to keep perfect records. Bitcoin was the first application of this technology. Instead of writing down transactions in a physical notebook, the Bitcoin network uses computer code to maintain a digital ledger. Every 10 minutes, all the new transactions get bundled together into a block and added to the chain of previous blocks, hence blockchain. So who are these notebook keepers I mentioned? In Bitcoin, they're called miners, and they're the backbone of the whole system. but they're not mining in the traditional sense. They're not digging holes in the ground, they're solving math problems. Here's how it works. Every 10 minutes, the Bitcoin network creates a math puzzle. This puzzle is really hard to solve, but really easy to check once someone finds the answer. It's like trying to guess someone's password. You might have to try millions of combinations, but once you get it right, anyone can verify that it's correct. The first miner to solve the puzzle gets to add the next block of transactions to the blockchain, and they get rewarded with new Bitcoin. This is how new Bitcoin gets created and how transactions get processed. Currently, the reward is 3 1/8 of a Bitcoin per block, which is worth about $350,000 at today's prices. But here's the thing. These math puzzles require enormous amounts of computer power to solve. Miners have built warehouses full of specialized computers that do nothing but guess answers to these puzzles 24 hours a day. The electricity costs are massive. We're talking about entire power plants dedicated to Bitcoin mining. Why do miners spend all this money on electricity and computers? Because if they solve the puzzle, they get a huge payday. It's like a lottery that happens every 10 minutes, except instead of buying tickets, you buy computer power. This system serves multiple purposes. First, it makes the network secure. If someone wanted to hack Bitcoin, they'd need to control more computer power than all the honest miners combined. That would cost billions of dollars and massive amounts of electricity. It's theoretically possible, but economically impractical. Second, it makes the network decentralized. There's no single company or government running Bitcoin. It's run by thousands of miners around the world who are motivated by profit to keep the system honest. Third, it controls the money supply. New Bitcoin can only be created by solving these puzzles, and the puzzles are designed to get harder as more miners join the network. This means Bitcoin gets created at a predictable rate regardless of how many people are mining. There will only ever be 21 million Bitcoin. We're currently at about 19.5 million, and the last Bitcoin won't be mined until around 2140. This scarcity is one of the things that makes Bitcoin valuable to its supporters. Unlike dollars, which can be printed indefinitely, Bitcoin has a hard cap. So why do people think cryptocurrency is revolutionary? What problems is it supposed to solve? There are several, and some of them are pretty compelling. First is the problem of financial censorship. Right now, if you want to send money to someone, you have to go through banks, credit card companies, or services like PayPal. These companies can freeze your account, block your transactions, or shut down your access to the financial system entirely. Yeah, maybe you did something illegal, or maybe they just don't like your politics. Cryptocurrency is supposed to fix this. If you have Bitcoin, you can send it to anyone, anywhere in the world, without asking anyone's permission. No bank can stop you. No government can freeze your account. Your money is yours, period. Second is the problem of inflation. Governments have a tendency to print money when they need to fund wars, stimulus programs, or bailouts. This devalues the currency and essentially taxes everyone who holds that currency. If you had $1,000 in savings and the government doubles the money supply, your savings are now worth half as much in real terms. Third is the problem of financial inclusion. About 2 billion people in the world don't have access to basic banking services. They can't get credit cards, loans, or savings accounts. But if they have a smartphone, they can use cryptocurrency. No credit check required, no minimum balance, no fees for having too little money. Fourth is the problem of cross-border payments. If you want to send money to another country, it's expensive and slow. Banks charge high fees, exchange rates are terrible, and transfers can take days. With cryptocurrency, you can send money anywhere in the world in minutes for a small fee. These are real problems, and cryptocurrency does solve some of them. But it also creates new problems, which we'll get to in a minute. The philosophical problem that crypto tries to solve is even bigger than the practical problems. It's about who controls money. Right now, central banks and governments control money. They decide how much to print, when to print it, and what rules everyone has to follow. Cryptocurrency is an attempt to take that power away from centralized authorities and give it to the people who use the money. It's money by the people for the people, with no kings or presidents or Federal Reserve chairmen making decisions that affect everyone else. Whether this is a good idea or not depends on whether you trust centralized authorities more than you trust decentralized networks run by anonymous people around the world. Now let's talk about the problems with cryptocurrency, because there are plenty of them, and anyone telling you crypto is perfect is probably trying to sell you something. The biggest problem is volatility. Bitcoin has gone from being worth pennies to being worth over $60,000, then crashed to 30,000, then up to 120,000. With this volatility, it's hard to price things in Bitcoin because Bitcoin's value changes too much. Imagine if you got paid in Bitcoin and then the price crashed 50% before you could pay your rent. Or imagine if you were a business owner and you sold something for 1 Bitcoin and then Bitcoin crashed before you could pay your suppliers. This volatility makes Bitcoin more like a speculative investment than a currency. The second major problem is energy consumption. Bitcoin mining uses more electricity than entire countries. We're talking about the same amount of energy used by Argentina or the Netherlands. The third problem is speed and cost. Bitcoin can only process about 7 transactions per second. Visa can process thousands. When the Bitcoin network gets busy, fees can go up to $50 or more per transaction. That's not exactly practical for buying coffee. The fourth problem is irreversibility. If you send Bitcoin to the wrong address, or if you get scammed, there's no customer service to call. There's no way to reverse the transaction. Your money is gone forever. Traditional banks and credit cards offer fraud protection. Bitcoin offers none. The fifth problem is complexity. Using cryptocurrency safely requires understanding private keys, wallet security, exchange risks, and other technical concepts. Most people don't want to learn all this stuff just to use money. They want money to be simple and safe. The sixth problem is regulation. Governments around the world are still figuring out how to deal with cryptocurrency. Some countries have banned it entirely. Others are trying to regulate it heavily. This uncertainty makes it risky to rely on crypto for anything important. The seventh problem is that it's become a playground for speculation and fraud. The crypto space is full of get-rich-quick schemes, pump and dump scams, and outright fraud. For every legitimate project trying to solve real problems, there are 10 projects trying to separate people from their money. So where does this leave us? Is cryptocurrency the future of money, or a speculative bubble that's going to crash and burn? The honest answer is that nobody knows. Cryptocurrency has been declared dead hundreds of times, but it keeps coming back stronger. It's also been declared the future of everything, but so far it hasn't replaced traditional money for most people. What I think is happening is that we're in the early stages of a transition to a more digital and decentralized financial system. But it could take decades, not years. Central banks around the world are working on digital versions of their own currencies. These would combine some of the benefits of cryptocurrency with the stability and backing of traditional money. China has already launched a digital yuan. The US is researching a digital dollar. Central bank digital currencies also have real reasons to fear. Meanwhile, the technology behind cryptocurrency is being used for things other than money. Smart contracts, decentralized finance, non-fungible tokens, and other applications are being built on blockchain networks. Some of these will probably be useful. If you're thinking about getting involved with cryptocurrency, here's my advice. First, only invest what you can afford to lose. Crypto is highly speculative and volatile. Second, do your own research. Don't buy something just because someone on the internet said it's going to the moon. Third, understand the technology before you invest. You don't need to be a programmer, but you should understand the basics of how it works. Understand what problem the crypto you are interested in is trying to solve and how effective it is at solving it. And finally, be skeptical of anyone promising guaranteed returns or claiming that crypto is definitely going to replace traditional money. The future is uncertain, and anyone who claims to know exactly what's going to happen is either lying or deluded. Cryptocurrency is an interesting experiment in creating money without central authorities. It solves some real problems and creates others. Whether it succeeds in the long run will depend on whether its benefits outweigh its costs and whether it can evolve to become more practical and less speculative. What questions do you have about cryptocurrency? Drop them in the comments and I'll address the most common ones. And if this helped you understand crypto better, subscribe because I'll keep breaking down complex topics that actually matter to your financial future. Thank you for watching My Money Mint.